Here's something that you might not have known. China used to be crypto's liquidity provider. When they printed, Bitcoin rallied. When they tightened, Bitcoin crashed. That game ended in 2021 when Beijing shadow banned crypto, leaving a $2 trillion hole in global markets and some very big shoes to fill. But now, Japan's applying for that position. After a decade of regulatory strangulation, Tokyo's suddenly throwing open the doors. Century-old companies are buying Bitcoin, American grifters are getting advisory roles, and Tokyo's building something that looks suspiciously like crypto pump infrastructure. Stick around to find out what they're up to and what it means for crypto. My name is Lewis, and you're watching the Coin Bureau. First things first though, nothing in this video is financial advice. We're just examining why Japanese policymakers have decided crypto needs saving after keeping it locked up in a basement dungeon for the last decade. If you want to stay updated on which countries could pump or dump your bags next, then smash that like button, subscribe to the channel, and ping that notification bell. Now, let's start with the macroeconomic gun to Japan's head. The yen's been trading at multi-decade lows against the dollar, turning every yen-denominated asset into a money shredder. Inflation's running hot, well above the Bank of Japan's 2% target, while rates are pinned near zero. That means that real interest rates are negative, steadily eating away at purchasing power. Japanese corporations are sitting on mountains of cash that's evaporating, and you can't envy their options here. Hold yen and you lose purchasing power. Buy Japanese government bonds and you still lose after inflation. Park it in a bank and they'll charge you for the privilege. This environment forced companies like Metaplanet to dump their entire corporate treasuries into Bitcoin. Metaplanet was actually a dying hotel operator before it discovered Bitcoin. Now it holds over 18,888 BTC, worth more than 2.1 billion, and its stock is up over 187% year to date. The company has become known as Japan's MicroStrategy, a publicly traded Bitcoin proxy for investors who can't buy crypto directly in their tax-advantaged accounts. The strategy worked so well that Metaplanet just got upgraded to the FTSE Japan Index and the FTSE All World Index. That forces every passive fund tracking these benchmarks to buy shares in a Bitcoin treasury company. Backdoor Bitcoin exposure for institutions that wouldn't touch crypto with a 10-foot pole. To understand how radical this Metaplanet story really is, you need to remember that for the last decade, Japan was a crypto ghost town. This is the country that gave us Mt. Gox, which vaporized 850,000 Bitcoin when it collapsed in 2014 and set the industry back years. The fallout from that implosion created a legal paradox that defined Japan's entire regulatory path as it relates to crypto. In a landmark judgment, the Tokyo District Court ruled that Bitcoin couldn't be legally owned because under Japanese law, ownership requires a tangible thing. This ruling made it impossible to regulate crypto under existing property laws and forced the FSA to build an entirely new legal category from the ground up. Then came CoinCheck in 2018, hacked for over $530 million worth of NEM. That was supposed to be the last straw, because the Financial Services Authority not only publicly roasted the exchange, but from then on required all exchanges to file detailed security reports and even conducted on-site inspections. This established a supervisory precedent, transforming the FSA from passive licensor to active interventionist supervisor. A license wasn't the end of scrutiny, but the beginning of continuous oversight. Funnily enough, they weren't able to stop the DMM Bitcoin exchange losing another 4,503 Bitcoin last year, allegedly to North Korean hackers. Just another 500 milli gone missing. Whoops. It makes you wonder if the regulatory straitjacketing was really even worth it. In any case, the lessons learned after Mt. Gox and CoinCheck turned into a lost decade for Japanese crypto, as the FSA went into defensive mode, its entire mission becoming risk containment rather than innovation. While other hubs were building bridges, Japan was building walls. The current crypto tax system of Japan perfectly reflects that old paranoid mindset. Under existing rules, crypto gains are miscellaneous income, taxed at progressive rates of up to 45%, plus a 10% local tax. That's a 55% haircut on your profits. You also can't carry forward losses or offset gains with losses from other investments. Buy Bitcoin at $30,000, sell it at $100,000, and the government wants $38,500 of your $70,000 gain. If crypto crashes the next day and you lose everything trying to recoup, you still owe that $38,500. No carry forward losses, no offsetting against other investments, just pure extraction. This system forces diamond handing by making any other strategy economically unviable. Japanese traders can't rebalance, they can't take profits, can't even tax loss harvest without triggering devastating tax events. The market's running on one cylinder when it could be running on 8. Even with these chains on, though, the Japanese crypto market is massive. We're talking about 32 registered crypto exchanges serving over 12 million active accounts. Those accounts hold over 5 trillion yen, or $34 billion in deposits. February 2025 alone saw 1.5 trillion in spot trading and another 1.5 trillion in margin trading. Industry analysts project 17.38% annual growth through 2033, with the exchange market expanding at 26.75%. And that assumes the current tax nightmare continues. But now the FSA has had a change of heart. It wants to burn its punitive crypto tax system down. Under their new proposal, crypto becomes a financial product, taxed at a flat 20% capital gains rate like stocks, and losses can be carried forward for 3 years. There are a whole lot of crypto bros and potential crypto converts in Japan who have been waiting for this moment. The Japan Blockchain Association surveyed the population and found over 60% would increase their crypto investments if taxes dropped to stock levels. The market was already projected to grow from 1.4 billion to over 7 billion by 2033. And that was before the government decided to pour rocket fuel on the fire. And by the way, if these numbers have got you wanting to FOMO into new crypto positions, then take a deep breath and don't do anything impulsive. Instead, check out the Coin Bureau's deals page. That is where you could find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. To get these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click one of the sign up now buttons. Remember though, these deals, they won't be around forever, so take advantage of them while you can using the link in the description below or the QR code on the screen. Anyway, Japan's regulatory walls didn't stop at the tax regime. All exchanges must join the Japan Virtual and Crypto Assets Exchange Association, or JVCEA, a self-regulatory body under FSA supervision. This system made listing new altcoins painfully slow, which explains Bitcoin's dominance in Japan. Most altcoins simply can't get through the JVCEA screening. While a handful of blue chips have made the cut, thousands of cryptos trading freely on exchanges like Binance or Coinbase remain locked out. The FSA even forced exchanges to delist privacy coins under pressure from international regulators, claiming that they facilitate crime, though Cash does the same exact thing and nobody's banning yen notes. They're building a sanitized market, scrubbed clean of the scams and rug pulls, but also legitimate privacy tools, not to mention meme coins and just about everything else daring and unhinged in the broader crypto universe. The Mt. Gox trauma really became regulatory dogma. When Japan says regulated crypto hub, they mean regulated. Now, it's worth noting, though, that this crypto tax overhaul is part of a coordinated national strategy. The velocity of change tells you someone in Tokyo decided Japan needs to be Asia's crypto capital and pulled every lever simultaneously. You see, reclassifying crypto as a financial product doesn't just cut taxes. It also creates the legal framework for spot Bitcoin ETFs. The Financial Instruments and Exchange Act already governs stocks and bonds. Add crypto to that list, and suddenly every brokerage in Japan can offer Bitcoin funds to retail investors. Perhaps the most bullish thing about all of this is that the FSA is actually creating a dedicated digital finance bureau to oversee all of this. Yes, that means that they will have a dedicated bureau strictly for digital coins. Prime Minister Shigeru Ishiba has a habit of evangelizing Web3 as Japan's economic salvation, calling it essential for addressing the country's demographic crisis. For context, Japan's working age population shrinks by over 500,000 people annually. Traditional banks can't hire fast enough to replace retirees, and Web3 startups can't hire at all under current rules. Desperate times call for desperate measures. So, for Ishiba, it's either throw the kitchen sink at crypto and become the Asian hub for high margin digital finance jobs, or watch your economy hollow out completely. This state level commitment was on full display at the recent WebEx 2025 conference in Tokyo, where government ministers shared stages with Ethereum Foundation leaders. The digital affairs minister gave keynotes alongside crypto CEOs, and Tokyo's governor was singing the praises of blockchain. Think less permission and more promotion from the government at this point. And Japan's corporate sector is paying close attention. The most telling example comes from Kitabo Corporation, a century-old textile firm struggling with years of losses, which recently announced plans to buy over $5 million in Bitcoin for its treasury. The company cited growing regulatory clarity and the need for a hedge against monetary debasement, framing Bitcoin as a, quote, foundational asset for promoting diverse business strategies, including cross-border services. When a fintech firm buys Bitcoin, that's a business strategy. When a 100-year-old textile manufacturer does it, that is a survival strategy, and a powerful proof of concept for thousands of other traditional businesses watching from the sidelines. Meanwhile, Japan's financial giants are placing different bets. SBI Holdings is the aggressive adopter, launching a joint venture with Circle to push USDC adoption and acquiring Web3 media giant CoinPost to build a full-stack ecosystem. MUFG is committed to its own infrastructure play, building the Progmat platform to become rails for stablecoins and tokenized assets. Then there's Mizuho partnering with NFT devs to promote a struggling regional shochu brewery, and SMBC dipping its toes in digital bond issuance while its trust arm continues declining transactions with overseas crypto merchants. Charming, but I guess they're hedging every bet. The divergence here shows that crypto has moved beyond niche experiment into sector-wide strategic realignment. Every major bank sees the writing on the wall. They're just reading it a little differently. SBI already got the ball rolling with Japan's first stablecoin transaction license in March, specifically for Circle's USDC. After years of Japan banning foreign stablecoins entirely, USDC can now trade on a Japanese exchange. Yes, just the one for now, but you gotta start somewhere. Next up is JPYC Inc., which will launch the country's first regulated yen-pegged stablecoin this fall after getting its license on August 18th. The company's targeting 1 trillion yen in issuance over 3 years, or about $6.8 billion worth. JPYC will be backed 1-for-1 by bank deposits in Japanese government bonds. The company makes money from JGB yields, creating a powerful incentive to maximize issuance. More stablecoins in circulation means more bonds earning yield. This feedback loop props up Japan's sovereign debt market, giving the government a new permanent source of JGB demand. JPYC will launch on Ethereum, Avalanche, and Polygon, making it accessible across DeFi. But the geopolitical dimension matters more than the technical aspects. China's mBridge project, now including Saudi Arabia, explicitly aims to create a parallel payment system operating outside of SWIFT and reducing vulnerability to US sanctions. Japan can't join without enraging Washington, but can ignore it without losing out on what could be the future rails for Asian digital commerce. So, JPYC looks a bit like a third option to satisfy Japan's geopolitical FOMO without ruffling American feathers. A private sector yen stablecoin on public blockchains offers a market-based approach that strengthens Japan's financial sovereignty while providing an answer to Beijing's state-controlled digital yuan. Meanwhile, the regulatory race across Asia gives Japan significant advantages. Its stablecoin framework has been operational since June 2023. Hong Kong's only takes effect this month and won't issue licenses until early 2026. Singapore is sticking to its cautious, gradual approach. Japan strikes the sweet spot, faster than Singapore, with more regulatory clarity than Hong Kong. Now, just when you thought that the picture couldn't get any more beautiful, Trump actually joined Metaplanet's advisory board in March of 2025. Crazy, right? Okay, all right, it's not that Trump. It's his son. And no, it's the other one, okay? Eric Trump is now a Metaplanet advisor, and he flew to Tokyo for the company's September 1st shareholder meeting. The meeting went exactly as you would expect. Shareholders approved Metaplanet's massive capital-raising plan, 550 million new common shares to raise $884 million, plus another 555 million perpetual preferred shares that could bring in up to $3.7 billion. The market loved it so much that the stock immediately dropped 5.5%. But Eric Trump was there to provide moral support, taking the stage with CEO Simon Jarovich for a fireside chat, while both men wore matching Metaplanet jerseys. How cute. He even blessed Jarovich with the ultimate comparison, saying, quote, "Michael Saylor kind of led the front in the United States. There's no question that Simon's led the front in all of Asia." Meanwhile, Metaplanet announced that it now holds 20,000 BTC, worth over $2 billion, making it the 7th largest public corporation Bitcoin holder globally. The preferred shares are structured in two classes, one offering a safe 5% yield, the other convertible to common stock, basically copying MicroStrategy's playbook from earlier this year. Eric Trump is bringing to the table the same expertise he brought the Trump Organization's failed ventures, a famous last name and flexible ethics. He's, quote, "actively involved in American Bitcoin alongside brother Donald Jr., a mining company with no mines that's supposedly going public in September." American Bitcoin's entire business model appears to be having President Trump's son on board, promising a NASDAQ listing, acquiring Asian companies, then profit. The company's reportedly hunting for listing firms in Japan and Hong Kong as, quote, "platforms for accumulating digital assets." In other words, they need real businesses to legitimize their paper company. The big picture, though, is that American crypto capital, now backed by a friendly administration, needs a regulated, geopolitically stable hub in Asia. Japan is building exactly that. For Japan's crypto comeback, it can't hurt to cultivate the appearance of backing from Washington, even if it comes from someone whose main qualification is emerging from the right birth canal. Both sides know what this is. It's theater that serves a purpose. Now, if all of this news from Japan is sounding too bullish to be true, don't worry, because the road ahead is paved with risks and uncertainties. For one thing, those tax cuts and ETF approvals remain proposals. They have strong FSA backing, but they still need to pass through the legislature in the next financial year. Political gridlock or delays could kill market momentum before it starts, and the infrastructure needed for a new crypto boom barely even exists. As of JPYC's launch, only SBI VC Trade holds a license to handle it. Widespread corporate and retail adoption will crawl if there are no on-ramps. Also, competitors Hong Kong and Singapore aren't sitting idle and will adopt their own frameworks to lure capital from Tokyo. Singapore's cautious approach appeals to conservative institutional money, while Hong Kong is racing to launch its stablecoin framework. Japan's advantage lies in moving faster than Singapore while offering more clarity than Hong Kong, hoping to thread the needle for risk-conscious capital. And, of course, all this depends on crypto markets not imploding. A brutal, prolonged bear market could freeze capital flows and destroy institutional appetite, regardless of Japan's friendly laws. And there's also a retail reality check, as Japan remains culturally conservative and cash-heavy, with only a very slim minority having ever owned Bitcoin. The ultimate test is whether elite-driven initiatives can provide compelling enough products to overcome decades of financial habit and lingering skepticism. Still, the state is pivoting like its life depends on it, with the FSA systematically eliminating every barrier to institutional adoption, like they're working from a checklist. Tax burden crushing returns? Cut it to stock levels. Missing institutional products? Create ETFs. No domestic stablecoin? License JPYC. Need brand name recognition? Rent a Trump. We're watching one of the world's richest countries making crypto central to economic strategy. The Bank of Japan painted itself into a corner where raising rates triggers a sovereign debt crisis, but keeping them low means a currency death spiral. The yen's destiny as confetti is basically locked in, and Japanese savers see their purchasing power evaporating. So they're looking for lifeboats. At this point, Bitcoin is just self-defense against their own central bank. If Metaplanet's success registers across corporate Japan, the floodgates open. Picture Toyota announcing $1 billion Bitcoin allocation, or SoftBank converting their entire treasury. Every CFO holding melting yen would have to explain to shareholders why they're not following suit. Yeah, it might sound fanciful now, but a lot of things that are happening in crypto today would have been unthinkable this time just last year. For the crypto markets, Japan's transformation from skeptic to champion proves something important. Serious countries with serious problems are turning to crypto for serious solutions. Whether this means serious green candles are coming for your portfolio, well, it's still early to say, but there's much to be optimistic about. And if you want another dose of East Asian hopium, why not check out our latest report on South Korea's parallel crypto comeback? Their new president is feeling the FOMO big time and has his own plan to compete with Japan, Hong Kong, and Singapore for the regional crypto throne. That video is right over here. And that's going to be all from me for now. Thank you so much for watching, and I'll see you in the next video. This is Lewis, over and out.